How much taxation in India takes away the gain from mutual fund investments? Whether it is 10%, 20% after indexation, or is it as per the income tax slabs? It's a question which everybody keeps on asking about. And there are a lot of changes with respect to income tax, how it has been applicable before and after March 31st, 2023. Let's demystify all these questions and more in this video of ours. I'm Gaurav Jasoria, the management graduate from IIM Calcutta, and I'm also the co-founder and CEO at NKJ Finserv LLP, which is one of the leading mutual fund distribution companies in India. We have been helping thousands of our investors in generating wealth over the last 19 years. Please get in touch if you need any help or if you have any questions around mutual funds and how you can potentially invest in mutual funds over a longer term to accumulate and generate phenomenal wealth. Let's take a look at the taxation of mutual funds in India. What we have done is we have divided the whole set of fund types across three different funds, which are equity. Equity mutual funds are those which invest 65% or more in equity. Debt mutual funds which invest 65% or more in debt instruments, while the hybrid funds which invest between 35 to 65% in equity. The tax rates we have taken are ones which are applicable before 31st March 2023 and the ones which are for the investments which are done after 31st March 2023. Holding period is important for each of the fund types because in equity mutual funds, 12 months is the holding period which determines short-term capital gain versus long-term capital gain. So for equity mutual funds, if the funds are bought and sold within 12 months, then the short-term capital gain tax is 15%. While if the funds are sold after 1 year, the long-term capital gain tax is 10% without indexation. After 31st March, if the funds are bought and sold within 1 year, it's the same slab which gets applied. In case of debt mutual funds, the biggest change which happened because of the changes in the income tax applicability before 31st March 2023 was that the holding period which led to a long-term capital gain tax indexation of 20% was changed. So all the investments done in debt mutual fund after 31st March 2023 would be taxed at a slab rate whether it is short-term or a long-term capital gain. While if the investments were done before 31st March 2023, for the short-term capital gain, it would be taxed at income tax slab rate. For the long term, you would get a benefit of indexation of 20%. In case of hybrid funds, the holding period is 36 months. If you buy and sell within 36 months, the tax would be as per your income tax slab rate, while the long-term capital gain tax would be 20% with indexation. This is same for any investments done after 31st March 2023 as well. Please note that long-term capital gains are tax-free up to 1 lakh, and beyond that, this table shows how the tax applicability has to be. Also, by investing in ELSS or equity-linked saving schemes, tax benefits can be availed under ATC, which are up to 1,50,000 rupees per year. In case of NRIs, there's always a confusion around how much TDS has to be deducted for any redemptions done in mutual funds. So we have simplified that here as well. In case of equity mutual funds, short-term capital gains are 15% and the TDS would be the same for NRIs. Long-term capital gains are 10% and the same TDS would be taken up while the redemptions are done. While for equity mutual funds which are under distributed income scheme under IDCW option, the TDS would be 20%. For NRIs, in case of hybrid funds, TDS is 30% in case of short-term capital gain, while it is 20% with indexation in case of long-term capital gain. On distributed income under IDCW option, it is 20%. In case of debt funds, irrespective of the time frame now, the TDS would be deducted at 30%. If you like our video, please click on subscribe and hit like so that we can create more and more interesting videos for you and you will always be updated about all the latest happenings around this channel.